Good morning, everybody. It's a couple of minutes before we begin, so I thought I would gather us unto ourselves. First of all, a huge thank you to Isabel and to Todd and to Joel, who have given up their Saturday morning to come and teach us about some very important things. Well done, those of you who've chosen to sit close to the overhead. You may wish to move so that you can see better. I want to start off by saying we are grateful and we are thankful for the people who have loved and nurtured and cared for this land generation after generation after generation, thousands of years before the people from England and other nations came to this country. And we are grateful for their hospitality to us on this land. And we work and strive to work together in partnership to care for this land. Thank you for coming today. It's important, I think, to do this every couple of years, just to make sure that we remember that life doesn't continue without an end. It is the way of things that we will eventually stop being in this fleshly body and move on to the big party. And it's going to be a very big party. Mine will have a jazz band. So we're very grateful to be able to get some advice on the legal aspect of things, on how we can make a difference with our legacies, how we can look at all of the aspects of estate planning and legacy giving. And at the very end, I'm going to talk to you about the practicalities of your funeral, because I really want that in writing in case your kids go, oh, she didn't want a funeral, and I can go, this is what she asked for. We're going to have more or less 2 presentations, and then we're going to break in the St. John's room for tea and coffee, and as Isabel calls it, a bio break, and we'll come back after about 15, 20 minutes and continue with the rest of the presentation. You all know where the bathrooms are, so I don't need to tell you. Over to you guys.
Thank you, Ingrid. Sound okay? Excellent. My name is Joel Hefty. I serve as the elected treasurer of our diocese, this Anglican Synod of the Diocese of Islands and Inlets, also called the Diocese of British Columbia. And it's my pleasure and honor to be in this role and to be with you today to talk a bit about estate planning, legacy giving, and to offer my perspective for the things that I have some knowledge about. I'm delighted to be here with Isabel, my colleague, the Chancellor of the Diocese, and with Todd Troyer, a partner in the chartered accounting firm Baker Tilly, who is donating his time today. We are immensely grateful, Todd. Thank you. So we've talked a bit about who we are, and this is the plan for the day. We'll talk a bit about the perspective of a recipient organization, how it is that that organization might use funds that are left to it, the things that are important for that kind of bequest or planned giving to include. Todd has expertise in accounting and taxes, and his comments will be very useful, I think, for all of us. I always am taking notes when Todd speaks because he has perspective that I don't, especially about current tax law. Very useful. And then after the break, Isabel will talk. You will love listening to Isabel. She speaks from experience and with great confidence, and I am certain that everyone here, whether you're attending virtually or in person, will go away with something useful. Okay, and after that, Ingrid will talk a bit about planning for our own conclusion and how to make that as easy as possible. Okay, now you've heard this twice. If you hear it again, you'll know that you know it for sure. All right. So my comments are fairly brief about recipient organizations and the things that are important to them. And these are the topics that we'll cover. One is the idea of a lasting impact. The next is the importance of flexibility. And by the way, I do have some things that I will hand out at the end, and it's useful to take notes. It is particularly important in our own learning. If you're connecting, writing and listening at the same time, you're much more likely to remember. So my notes will come at the end, and they'll be available for you. Okay, so lasting impact, flexibility, and the importance of that in any kind of giving that you do. The donor's wishes, and making certain that those wishes are clear. We'll talk a bit about fiduciary duty. Fiduciary, a fancy word for what you do with other people's money. So the responsibility over funds that are entrusted to your care. They are not your funds, but you must look after them. And this is much of what we do at the synod level and also at the church level. So there is a fiduciary responsibility to respect the donor's wishes and the intent of the donor. We'll talk about ways that make gifts last. And I have some examples of ways that another parish in our diocese happens to be where I worship, so I have some knowledge of their financial policies, and I have permission to share one with you. And I'll talk about that for a bit. And then we'll talk about money at work and the oversight of that money that stays at work in the long term. Okay. So first, let's start with the lasting impact part. And we think about wanting to have a lasting impact, to make some significant contribution, something that lasts. Maybe you want to have your name attached with it, maybe you don't. Maybe it's just the happiness that comes through giving. I remember being struck about what pleasure there is in giving away money, not just acquiring it, but giving it to something that I believe in. And that's something that I hope that you also are able to discover that joy. The significance of the gift is personal. You know, what's the widow's mite, the story of that. And when someone gives from the heart and gives something that has meaning to them, that's the important thing. The organization then also has an obligation to receive that in the same spirit with which it was given. And so we are mindful of that on an ongoing basis. When we talk about flexibility, I'm talking specifically about some donors have very precise wishes which are easily addressed and followed. Some donors have wishes that are much more difficult to follow, especially if the gift is a long-term gift. Isabel and I spend a fair amount of time looking through wills and previous synod documents and previous diocesan council decisions to determine how did we get to this place of this particular gift being used for this purpose. And so it's important for there to be some flexibility if it's possible to do so. I've included some wording that is not unusual, that provides flexibility. I would emphasize the points in blue on the screen, though. You would want to ask the recipient organization what their preference is. Better yet, talk with your lawyer, because they will know the precise wording that fits. But the wording, in effect, is, as a specific request, but not a condition of the donation. So it's very clear what the intent is, but you're also offering the organization the flexibility to use the gift in a way that the organization must do so in its current circumstances. We know how things are today. We don't know how things will be 10 years after we're dead. And so that flexibility can be essential to an organization, and the ease with which it may deploy a gift for the purposes that are most closely aligned with the donor's intent. When we talk about donors' wishes, then, designated gifts are, of course, welcomed. But we're just mindful that those intentions may also have a sunset, that particular ministry of a parish. For example, at St. John the Divine downtown in Victoria, we have a food bank, and that's a really wonderful ministry. One might leave a big sum of money to the food bank, and if the food bank is no longer needed, may it be so, 10 years from now, what do we do with that money? It could be given to another food bank, conceivably. That would be consistent with the donor's wishes, but it would lead to a significant discussion about what did the donor really want. Do they want it to be at the church for this specific, what about another kind of outreach? So these kinds of questions are important to anticipate if possible. The diocese has a specific and 4-page gift acceptance policy. And on this point, I'm going to make a reference to it. This is one of the documents that's available for you if you wish to take it. It goes on about conflicts of interest and different kinds of gifts that may be accepted, but it's important to note that just because you want to give something to an organization, it does not have to be accepted by that organization. So if you put too many strings or too many conditions on a gift, it may not be accepted. That's kind of an interesting twist. The policy at the Anglican Synod of the Diocese of British Columbia is that it's the finance officer who has that discretion, and the finance officer may defer this to diocesan council for a decision. Diocesan council, of course, being the representatives of all of us who comprise the Synod. There's some suggested wording and different types of accepted gifts that the diocese anticipates receiving. We'll talk shortly, Todd in particular will talk about the flexibility and tax advantages of gifting appreciated securities and essentially excluding the CRA from being one of your inheritors, which for some is very appealing. The last point on here is just what was the intent of the donor. You know, the designated gift guidance is best clarified when received. The more information that we have early, the better. All right, so I've just referenced the gift acceptance policy, and that's available for you to have a look at later. And I'm happy to answer questions at the break or afterwards about that policy. Okay, we'll talk a bit about fiduciary duty, and as mentioned before, it's a fancy word that means what we do with other people's money that's entrusted to us. And the comment here that I added the slide on the far right, the little bubble with what was the donor really thinking? What were the donor's real wishes? And this is the puzzle that Isabel and I frequently face with what did the donor want? And she will make the point. I'll let her make the point. Because she knows many donors. Well, go ahead, you can say it.
Ingrid is encouraging me to interrupt you.
It's more interesting if more than one person talks.
I do have a voice. I use it quite often. Yeah, this is I'll get into it when after the break. I can talk about some of the puzzles that we've tried to untangle.
Mm-hmm.
Yeah.
But you often say you've never met a donor who said, "I would like you." Go ahead.
I have sat across the desk from probably hundreds of people taking instructions on writing a will. And one thing I've never heard them say is, I want to give a lot of money to the church, but I want them to sit around for at least 50 years to figure out what they should do with it. And in the meantime, don't spend any of it. Just let it sit there. That is not what I've ever heard. So what we do try to do is honor the wishes that have been put into writing. And what Joel is talking about is please, please, if you're going to update your will or write your first will, don't restrict what you want us, if you're giving the money to the church, either to your parish or to the diocese, don't restrict us so that, and you're using 10 years. Some of the wills we've looked at were written 100 years ago. And so the conditions under which those were written and the realities at the time are so different now that it's really hard to figure out what we should be doing to honor those original wishes. So we do a lot of, apart from daydreaming, we do a lot of discernment. So back to you.
Thank you. I didn't want to steal that line about, so I'm glad you got it in. Thank you, Ingrid. Thank you, Isabel. All right, so fiduciary duty. So next, I'd like to touch on making gifts last. And here is where there's an opportunity for many organizations to use money. There's an opportunity for organizations to use it all very quickly. And I've seen churches that do this. We got a bequest, we've balanced the budget for this year, and we've put in a new sound system. Great, what are you going to do next year? So it has to be this mixture of prudent usage and planning for the foreseeable and realistic future. And on this point, I will reference a policy from my parish, that's St. John the Divine. It's the practice there that for undesignated bequests, so you could designate, and this would not come into play, undesignated bequests, the parish will only take the first $1,000 and then 40% of the next incremental amounts to a maximum of $40,000 per year. Anything above that and all that remaining 60-ish% goes into a separate internally restricted fund that has grown very nicely over the last several years. The internal restrictions on that fund, and I'm sorry I'm in the weeds here, the internal restrictions are that only 10% can be used in a given year towards an approved project or towards the budget. So it means that legacy giving that's undesignated has a longer term value and lasting effect on the parish. And so St. John's unrestricted or internally restricted, there's the right term. Now, Todd is wincing because he does the financial statements for St. John the Divine. Don't get this wrong. There's more flexibility. So there's value in thinking about what would we do if we received a large sum of money, and how could that be used not only for short-term needs, but also for longer-term needs, especially if we don't have any specific instruction. So that's a policy option, and I provide that to anyone from the parish or anyone who's interested. It's not prescriptive, but it's one model. Okay. And I just talked about this, so we're going to skip this slide altogether. And happy news, this is the last slide that I have, and I'll step back. Larger sums typically are invested at the diocesan level. There is something called the Consolidated Trust Fund, and the CTF, Consolidated Trust Fund, for the diocese includes diocesan money. It includes the money of many different parishes. So there's this fiduciary arrangement, and it runs essentially like a little mutual fund. It's not a mutual fund, but it kind of works like one. So when new money is deposited, it receives a number of units based on the previous month end, and those units are all treated the same. The fund aims to provide regular income and prudent growth, and has some parameters around what is an acceptable investment and what isn't. It is professionally managed by a firm presently managed by a firm called Jaroslawski Fraser, and it's overseen by a committee of several people, 6 or 8 of us, I believe. Yeah. And it gets quite a lot of scrutiny. There are discussions right now about how do we respond to the current economic situation and what is in the prudent best interest, not only in the short term, but in the long term, because some things are likely to last and some things are not. So with income and growth and prudence and capital preservation all kind of floating around there, this is what happens with long-term funds. The work of that committee and the results of that fund have been, I wouldn't say impressive, but very good for what it does. It regularly distributes about 4 to 4.5% of its income, and it has grown. So the overall performance over the last 5 years, I believe, is about just under 10% per year. Can you do better with a private investor advisor? Maybe, but this is a lot of people's money, and it's invested for the benefit of many people, and that's not a bad return. So I'm proud of the work that that group does. All right, happy news. That's the end of what I have to say. So are there questions before we move on to the accounting side of things? Sorry, I'm a teacher part of the time, so I will wait 10 seconds. Okay, well, please do feel free to talk to any of us at the break. And with that, I will pass the microphone and the machine to Todd Troyer from Baker Tilly.
Uh-oh, my connection's different. I'll be right back. Technology, you have to travel with a bag of parts. So. Okay. So that looks like success to me. Okay. Well, hi, everybody. Thanks for the invite to speak to you today. Thank you for the invite to come, and very nice to see you two again. This is a panel that we'd done together in June of 2024 for the first time, and in tax things have changed since then, so I'll quickly just touch on that. But first, my name's Todd Troyer. I know Joel's given me a very nice intro. Our firm, Baker Tilly, I would say we act like a local accounting firm, but we have partner offices all across Canada. We've got 23 offices across Canada. Our locally owned and operated firm here in Victoria has an office at Uptown, one at West Shore where my desk is, and we've got a location at Sydney as well. A little closer? Okay. All right, there we go. So that everybody can hear? Good. All right. And our firm is about 55 people in Victoria. So for us accountants, May is the best month of the year because it's right after April 30th and we don't have to look at personal tax returns again. So another fun thing to come out was to come out and speak to you guys, which doesn't involve me sitting at my desk doing tax returns. So I'm happy to be out here on a Saturday. When we last did this presentation, it was in June, and there was lots of uncertainty in tax right then. We had word that the capital gains rate was going to change for 2024 on June 24th, and so we proceeded throughout 2024 with that knowledge, and then had it change in February, or when the government changed over. So I had to clean up my slides because they reference this change in the capital gains rate, which doesn't exist anymore. So it's kind of a nice little thing to do at the end here. So that was good. So our focus today is charitable giving. So as Joel is definitely a great resource on the investments and the mechanics on how organizations operate, and Isabel helps many people put plans into place and discuss charitable giving as on the charitable side as well as on the estate planning side. My piece on that is I'm going to do a little demonstration of how charitable giving works on your personal taxes and how it could be used for estate planning, and then a little bit on how donating securities works from a tax side. So I will proceed ahead. And like Joel, my presentation is not that long, and so I think if you've got questions, you can either stop me. I'm okay if you put your hand up, or if you want to wait till the end, feel free. All right. Now that's pretty small. Can everybody see that? No. Oh, how do I make it bigger? Let's see if I can go. Well, you know what? I will. So, first off, as a disclaimer, whenever we talk tax, at our firm we prefer to make it a tailored solution for every one of you. Everybody has different circumstances and different things going on in their lives, and so my presentation here can't really deal with them all. And so our tax system's complicated, and it's getting more so every day. The purpose of the discussion is to help you understand the benefits of charitable donations in general. I won't be able to discuss all the rules, otherwise you will be asleep by the end, so I try to avoid that. And each of you will have specific facts that may require analysis and application of the more complicated rules. So after this, what I'd hope you'd do is you'd go, okay, now I have an understanding of how it works, now I can go get some advice on how to do this. So seek specific advice on donations and bequests, especially as part of the estate plan. Day-to-day donations during your lifetime, it doesn't require a lot of planning. It's great to give to the charities that you care about. But when using as an estate planning tool towards end of life, there are some tricks and traps and things like that. So, oops, too far. Oh. Post-tax season jitters. Okay, so our individual tax system, that's a little bit bigger, but still, sorry. So our tax system has graduated rates. So the more money that you're reporting on your tax return, the higher the tax bracket you go to. And it's a marginal rate system, so once you get into a certain tax bracket, you still get to take advantage of the tax bracket below that, but the one above that's where you earn your next dollar, that's the rate you'll go at there. So the lowest combined rate in BC is 20%, 20.06, and that begins at $20,000. Basically, you can think of your first $20,000 on your tax return as tax-free. Highest combined rate in BC is 53.5%, and that begins at $246,000 of taxable income. So in between that, there's 10 tax brackets. So there's quite a few, depending on what's going on. This is jumping around. Sorry about that. There we go. Okay, charitable donation. What is a charitable donation? So it's made to a qualified donee, so a registered charity and some others. Churches qualify as registered charities. It must be a voluntary transfer. It can't be something where you get return back. It's without obligation and no material advantage. You'll hear of people going in charitable golf tournaments and things like that. They can't issue tax receipts because you've received value of golf or dinner or whatever it is that you get out of that. Charitable donation has to be without that value. So it must be, the qualified donee will issue a charitable tax receipt for the value of the donation. So most of you will have the experience with your organization here. You make your donations through the year and you'll get a receipt at the end. I think it's a consolidated one, I guess. It wouldn't be for every Sunday, probably. That's how most organizations do it. So the donation tax credit mechanism. So many people think a donation is a reduction of income. It's not. It's a non-refundable tax credit on your personal tax return. So what does that mean? A tax credit reduces the federal and provincial income taxes in the year you make the claim. So you're not required to use the donation as a tax credit in the year you make the claim, So some people will accumulate some funds and they'll decide to make a larger donation, and maybe it doesn't make sense for them to use the tax credit in that personal tax year. You report it on your return, you can carry it forward for up to 5 years. So the maximum donation that can be claimed in the year is limited by 75% of your income and 100% in the year of death and then the year prior to death. So people talk about making their taxes zero through charitable donations. You can't quite do it, so in most cases. Donations can be pooled between spouses. Doesn't matter whose return or whose name the receipt is for a couple. And it can be used on either, and it can be carried forward and used on either. So I had already said unused donations can be carried forward for 5 years. And then I've got a little example here for you. It's going to be small. Let me see if I can do the bigger one. One sec. No, wrong one. Very tiny, yes. Okay. But in Excel, I know how to blow it up better. Too big. That might work. There's technical support in the back. Great. Okay, that'll be helpful with a couple of the spreadsheets. Unfortunately, when you come to deal with accountants, you end up with spreadsheets. So Joel's presentation is all really nice looking and has pictures and all that. I'm not very good at that. Okay, so this table basically lays out the tax credit rates for 2024. So when you donate $200 or less, you get the federal rate at 15% and BC rate at 5.06, so a combined 20.06. So for 200 and under, you get the smallest amount of bang for your dollar. So the remainder, if your income's under the 246,000, is at 29% federal, 16.8% BC, so combined 45.8% tax credit. And if you're over that 246,000, so in the top tax bracket, 53.5 is the donation you get. So you donate $1 and you get 53.5 cents back as a tax credit. So the government system has made it so that charitable donations are a good deal. You can help organizations that you care about and get a break on your tax return. In my mind, fabulous. You pass me my phone there, Joel. Absolutely. It's very secure. I can't even get in. There we go. All right. So what I was going to say there I feel that the reason the government gives a good deal on this type of donations is that these are many of the organizations you might donate to are probably areas where the government should be putting money themselves. So they're happy to have you participate in that. So. Okay, so little example. So if a $10,000 donation is made, and that's less than 75% of net income and less than $246,000, your credit on your first $200 is $40.12, and the credit on the remainder is $4,488.40, and so total tax credit to use against your taxes, $4528.52, so 45.29%. Just a little illustration on that. Okay, unfortunately, I'll have to go back to my small slides again. This will be my learning for next time, figure out how to make the PowerPoint bigger. There we go. Okay, so the easiest way to make charitable donations is to go online and donate from your bank account or electronic transfer or check, or walk into your parish, or with, I don't know, is cash still a thing these days? Many organizations it is. So that's the simple, easy way to make donations. So what I want to show you here is you can donate by gifting securities that you own already. And so in general, if somebody takes securities and they transfer them to someone else, you're deemed to dispose of them, and there's a taxable event that happens there. So you pay capital gains tax on that, and that goes on your tax return. So when an individual sells or transfers securities, it's a taxable sale. A capital gain is calculated, tax paid on that gain on your tax return. So for many years, the government has allowed a 0% tax rate on donations of securities to charities. So when you make that transfer, instead of having tax paid on it, you pay no tax, and you get the full donation credit as well. So they're kind of giving you two sides of the deal on that one. So there's no gain on the transfer of the security, so no additional tax. The donor receives the donation receipt for the fair market value of the securities on the date of the transfer. So it's a huge additional value to the donors and the donee. It applies if the securities in question are held as capital property by the individual. I have to make that disclaimer there, because some people are day traders and they do this as a business, and then it's not a capital gain type of thing, and this doesn't apply to that. There's not many people who do that out there. Okay, so now I've got a second example here. Let's go back. I can use the spreadsheet again. Not that one, that one. And I will make it way bigger. There we go. We've got a chance anyway. Okay, so I'm going to compare a cash donation to a charity versus a donation of securities. And so the concept of value is, remember I said a donation has to be without, you can't get anything out of it. But the one thing you can get out of it is a tax advantage. So it's the one thing you're allowed to get out of a charitable donation. So I'm doing this at the BC 2024 federal tax and credit rates. I'm doing the calculation at the highest tax bracket. So if someone does this on their own and they're in the middle, it's going to be a little different result, but it'll give you the concept. And donation is less than 75% of net income, so no limitation there, and the securities held by the taxpayer is capital property, so this zero rate does apply. Okay, so if we have, fair value of security, let's say someone's making a $50,000 donation of securities, and the adjusted cost base of that security, what you paid for it, is only $1,000. Some of you may hold these securities that have been around for a long time, Bank of Nova Scotia, some of the other banks that you've held for a long time, and prices have gone way up. There might be this large type of gain in there. So if tax payable if securities sold and cash net of tax is donated. Okay, so we'll just walk through this. So proceeds of disposition, $50,000. So from there we take the $1,000 adjusted cost base, so a $49,000 capital gain. And the tax rate, 50%. I don't have to worry about that other rate we were talking about, which is very nice. So taxable capital gain, $24,500. BC's combined top tax bracket is 53.5, so tax on that would be just over $13,000. So you take the 50 that you're going to donate, minus pay the tax, donate the rest, you end up donating $36,892.50 to the charity. And you get a donation receipt for that. So the working through the tax credits on that donation receipt, here's the federal timed by both brackets and the provincial by both brackets, so total tax credit of $19,671. So here's the value that's created for the charity gets $36,893 in cash at the end, because charities, when they receive donations of securities, mostly their policy is to sell them right away and turn them into cash and then invest them in securities that fit their profile and plan. So charity gets cash of the $36,000, donor gets a tax savings just under $20,000, so total value by donating cash, $56,000. So we'll contrast that to if we donate the security rather than selling it and then paying the tax and donating the remains. So taxable capital gain was a fairly big number up there. It's 0 now. Donation receipt is 50 because you don't have to pay any extra tax. So you've got all this cash that you can donate to the charity. Donation tax credits, $26,000 there. So the charity gets a donation value of the 50 that they get to use and put into their programs and follow the wishes with. Donor gets a tax savings of just under $27,000. So total value by donating securities, $76,000. So an increase in value by donating those securities, $20,000. So 36% more value for yourself as the donor, and the charity is receiving the money. Does that? This is always complicated, and this is where I said there's rules even behind here that are more complicated. So what I was hoping that would be is just an illustration of the value of donating securities rather than cash for larger donations. We wouldn't want to donate every Sunday your securities. That might get tough. Yeah, one share of a very small stock. All right. So there's gifts of securities. And then let me go. Okay, so charitable gifts on death. So this is where we do estate planning for many people, and so as they're coming to the end of their life, they know what they want their wishes to be in the will. How does that work for tax purposes? So a common estate planning tool is to list charitable donations in the will to be made from the estate. So these donations are not initially claimed on the deceased taxpayer's date of death return. They are claimed later when the cash donation has been made and the donation receipt issued. The executor of an estate has to spend some time, and there's rules about waiting period and all that sort of stuff before things can actually happen. So once the donation is made, it can be first claimed as a tax credit on the estate tax return. So there's a tax return when someone passes away, they're deemed to dispose of everything they own on that day, and taxes are paid up to that date. And then depending on the size or complexity of an estate, it could take a year or 2 years to eventually wind up that estate. Those returns are called T3 trust returns at that point. We call them the estate return. So donation can be made on the estate returns, or it can be carried back to the date of death tax return, which is really helpful usually because the date of death tax return, when somebody passes away and they're the last to die of a couple, everything becomes taxable. There's no spousal rollover to another spouse. There's no rollover to the next generation. That's when I say the chickens come home to roost, and CRA gets their last shot at you. So RIFs that you have, assets that you haven't used during your lifetime, the value of that becomes taxable. That's usually what mainly drives the taxable event when people pass away as retirees. So being able to carry the donation back to that return is very helpful in estate planning. So, and also the last thing to make here is, so the donation can be up to 100% of the income in the date of death tax return or the tax return prior, or 75% limitation on the estate return. Now, so there's a concept, who's heard of alternative minimum tax? Couple. So it's been in the news recently. So when you do your tax return, your return is calculated under Part 1 of the Income Tax Act, and you report your income and take some expenses off and your non-refundable credits, and they calculate the tax. Your donation credit goes in there. Here's what you owe. Here's what you already paid. You refund or balance owing at the end. So there's another system. A number of years ago, the governments of the day brought in. They felt that high net worth Canadians weren't paying their fair share, and they were using things like charitable donations to try to make the abilities to not pay tax and not help fund the government and take their money to the charities that they want to support. Charity is just an example. I'll go to a couple of others. So they brought in this system where they discount the benefits of charitable donations and the other things that they can do. So there was another system, so you owed this amount on this side on Part 1, and then alternative minimum tax comes down to a different answer. If the alternative minimum tax number was higher than your Part 1 tax, you had to pay the higher number. Now, there's a credit you get credit for that, as you pay Part 1 tax as things go on, you get to claim that for up to 7 years against that. So it's not a hard tax that you'll never get back. They're just making sure that everybody pays some as they go through their lives and even to death. So if your eyes have rolled up into your head, that's okay. Even us tax practitioners, we look at this and go, wow. So it's for people that have income greater than $173,000. There's an exemption below that. So tax preference items are the things that are not included under the AMT that you could catch you. So if you have a year where you have large RSP contributions can trigger this. Eligible dividends, because they get a preferred dividend tax credit. Capital gains exemptions, so if you sell a qualified small business as a business owner when you retire, there's a capital gains exemption that you get. That's a huge tax savings that triggers this as well. Non-taxable portion of capital gains, and then the charitable donations is the final thing that are examples of things that could bring on this alternative minimum tax. And that's why I say when you're doing estate planning and you're thinking about maybe larger donations on passing because you're dividing up your estate, that's when this needs to be considered as part of that plan as well. So just AMT is the initials, alternative minimum tax, just go, there was something about that, ask your advisor about that. And as I said, sometimes that alternative minimum tax can be claimed in future years, but it's interesting that sometimes when people are subject to alternative minimum tax, when they have a life event that brings on these things, their income is lower after that, and they don't have the ability to use it up. So that just has to be part of the understanding of what's going on. So that'll affect the timing of the tax savings of the donations. All right, now that I've killed you with alternative minimum tax, I'm happy to answer any questions or clarifications any of you might have at the back.
The gifting of securities, is there a possibility of gifting a portion of a security? Like, can you break up the security and give a portion of the security so that it's still like, like if everything gets transferred to my wife, let's say, but I want a portion of if I've got a really large security, and I know that my life insurance and other things are going to take care of her.
Mm-hmm.
That portion of the security that I can then get tax returns and do all that stuff. Is there, can I divvy it up a little so that I get that good tax return on my debt?
You can't split a security. Sorry, yep. Yeah. I will, yes. The question is, so I'll paraphrase, so if you're donating, can you donate just part of your securities and achieve this zero savings of tax, or the 0%, and so that some stays in your estate and you're only donating part of the securities? It might be more clear even with my example. So let's say you've got 100 Apple shares and you want to donate 20 of them to a charity. So you're free to do that during your lifetime. You can make that choice, make that donation, and then keep the rest in your portfolio, or on passing, then it goes on to heirs. So Isabel, when she comes up, she'll talk about wills and how to designate beneficiaries and that sort of stuff. So it can all be dealt with in a will. A will can be very flexible and useful in planning out that sort of stuff. Does that answer the question?
Yes.
Okay, great. Anybody else? I don't see anybody sleeping, so it's good. Yes? Absolutely. Can you donate securities during your lifetime? Absolutely. It happens every day or every month for the diocese and the parish churches, and charities are already prepared for it. They've got the forms all set up, and your investment advisors know how to do this. They've done it for many of their clients. It's very common, and that's actually, you'll probably get more benefit from the zero tax rate during your lifetime. Yeah. You bet. All right. Well, I'll shift over here and I'll pass over to Isabel. And if other questions come up, I'm happy to answer.
I think it's time for a comfort break, and there is tea and coffee in the St. John's room, so please take a break. And what is the time now? So maybe we'll say we'll be back at 10 past 10, 10 past 11? 10 past 11? Okay.
Isabel, you don't need the tech, do you? No.
So I need to be here. And can people hear this now? It doesn't sound like it. Oh, okay. But I'll have to have it here. Okay. Yeah, well, I'll do a sound check. Yeah, okay. Two things you can't avoid. As much as possible. So, yeah. So the date of death return. So I'm thinking of a uncomplicated, where there's no probate, small enough that the banks will just transfer that stuff over. Small estates, in other words. You can get the charity, but you're saying that you need to receive. I think I'm going to better stay away. Do you want me to do that? No, I might be able to do it. Well, I have a famously done that, and I was entertaining yesterday. So, and I had some stuff to move around because we had a new printer installed. Moving stuff around is not good for a battery. Part of my section was the chaise lounge. That's what did me in. Sorry to be bossy about the handouts, by the way, but people know. Oh, yes,
All right, we all seem to be back together again. Mike, do you need a countdown to? We're good. Thank you. Well,
Mike-
thank you so far to Joel and to Todd for their really helpful financial input. As somebody just said to me, some of it went way over her head, but she knows now to speak to the right people about this stuff. So that's very helpful. And now we're firmly in the capable hands of our Chancellor.
Thank you, Mike. How's the sound? Okay, thank you. Good morning. It's still morning. You all with me? Yes. Okay, so good morning. Good morning. Thank you. I am going to talk to you today and give you some information and some suggestions. I am not going to give you legal advice because I'm not your lawyer. We have not created a lawyer and client relationship, so you can't take this as legal advice. Please don't. I'm not also providing you with any kind of information or advice from the Synod. I am not representing the Synod. I'm just giving you some thoughts from my own experience. So with that said, what I normally do is talk about things slightly out of order because you need a will when your life is over, but I start usually by talking about wills and then powers of attorney and representation agreements. And I'll probably stick with that, although I do want to make sure we cover what Ingrid has told me is something that at least some of you are concerned about, which is something that you're referring to as an advance directive. So just remind me when we get there, if I haven't addressed that, and you can ask questions when I get to that part of what I talk about, okay? The title of this out on the flip chart out there is Death and Taxes. What a cheery subject. This is actually my name for what we're doing here.
Blame Isabel.
Blame me. because I have an old friend I've also provided legal advice. And one time, years ago now, she said, Isabel, we have to talk about death and taxes. And what she was talking about was some changes in the way she was holding some of what she owned, her house, some of her investments, and bank accounts. And she was concerned about the tax implications of the way she had things structured and what would happen when she's gone. So death and taxes, we'll blame Susan, my friend Susan, for that. Cheery subject, but seriously, this is a topic, these documents I'm going to describe for you, this is hard stuff to face up to. When I sit with clients have sat with clients over the years, I talk about everything in the hypothetical, because you can't really sit and talk without starting to cry and go into terrible situations without making it just hypothetical. This is not going to happen, but let's talk about what if. A little bit of denial. So will, power of attorney, representation agreement. Those are the three legal documents that lawyers who do this kind of work will prepare for their clients. You'll be surprised, I think you'll be surprised to know that in British Columbia, more than half of the population dies without a will. It's surprising, right? And it's because for some people, they just don't want to face it. For some people, they don't think about it. Some people don't think it's important. It's important. The will is what governs everything you're legally owner of when you die. Now that's important to know, because if you hold your home, the title to your home, in joint tenancy, how many people know what that is? Yeah. When you pass, if your spouse or whoever you're in joint tenancy with is still alive, the will doesn't cover that, because it's automatically owned by the survivor. That's what the joint tenancy indicates, is right of survivorship automatically by operation of law. So if your house is in joint tenancy, you don't need to worry about covering that in your will, unless you're if you're the survivor, then you get. So legal owner of what you have when you're gone. Securities. Todd has told us about how to deal with securities during your lifetime. If you get rid of everything before you're gone and get wonderful tax receipts, you won't have to worry about that either. But bank accounts, again, if they're in joint tenancy, joint ownership, cars can be held jointly, vehicles. So you think about what you're the actual legal owner of, and that's what's going to go into your will. So that's the universe that the will covers. The things to think about when you're doing a will. How many people already have a will? Oh, lots of you. Okay, I recommend that you look at those every 5 years, or if there's been a major event in your family, birth, death, marriage, that kind of thing. Take a look at it. Just refresh what you've got in there. The important things to cover, the most important thing to me is who you appoint as your executor. If you're in a relationship, long-term relationship with somebody you have a great deal of trust in, you can name your spouse. I say can because it's not always a good idea. If you've died, your spouse is going to be in mourning, and they're not necessarily going to want to take on a whole lot of work. You might think about somebody outside of the family circle. So your executor is somebody you have complete trust in, who will follow your wishes. There are people who have more assets and complicated situations with what they own, will consider an institutional executor. It could be a bank, or one of the banks have. I think they all now have trust companies associated with them, merged into them, and accounting firms. I'm sure you've probably been nominated. Yeah. lawyers and law firms can do that too. And this takes the burden off of the family. So executor, appointing your executor. And I think there should be one alternative in case something's happened to the person that you've named. You don't have to worry about a successor if you've got an institutional executor. So then we're looking at who is supposed to get whatever you've got. Let's say you've got a house and an investment account and a bank account. That's pretty standard for a lot of people. Who do you want to get all that stuff? Your legal obligation is to your spouse and your children. And those used to be pretty straightforward concepts. They're not anymore. Everything is complicated these days. Spouses are not necessarily people you've been married to. And children may not be exactly who you thought they were either. Believe me. Yeah, life. So if you don't have a spouse and you don't have children, at least that you know about, and I've had some embarrassing conversations. I've had to have one part of a couple leave the room so that the other person can tell me about children that are not disclosed. And this has happened. It's created all kinds of problems. Not for women. Well, actually, well, that's not disclosed. There was one, actually, in my practice, that who was a child was given up for adoption. Anyway, the people who are you are legally obligated to provide for must be represented in the will. Otherwise, you face the possibility of a challenge under Wills Variation Law. It used to be something called Wills Variation Act. They've now incorporated it into something that's more comprehensive, Wills Succession, WESA, Wills Estate Succession Act. So it's an easy legal challenge, easily won by somebody who's protected, a spouse or a child, underrepresented or unrepresented. So other than that, you really are free to leave money to whoever you want. The cat rescue, I'm being a little silly, but not really for the cat lovers. But what we like to think of, and based on what you've heard from these gentlemen this morning, is that it might be a good idea to leave at least some of your money to your favorite charity. In our case, it would be your church. You have a terrific tax advantage, and you also have the joy in knowing that you are contributing after you're leaving the planet and going to that party with the jazz band. Thank you. Can we have a little classical too? Okay. Mozart, maybe. Thank you. So you have a lot of freedom outside of that one restriction on who you can leave money to. And if you do decide to make a charitable donation, hopefully to the diocese or to your parish, please, going back to what Joel said about an hour ago, give us a little flexibility. You really do not want to tax our brains. You know, we've been looking at wills, not just 10 years old, but 100 years old and more, trying to figure out what on earth we should be doing now, because everything has changed. The amount of money may be a lot less than originally. The value of it has depleted, or it could be the other way around. We've got so much money and very little ability to spend it. What's the one example we laugh about is the hearing aids and wheelchairs. Yeah, we've come down to that. We can't spend the money because there's nobody that needs a wheelchair. It's not quite that simple. I'm oversimplifying, but please think about what will resonate for you if you want to look after the food bank, which is very much in need now. But if at some point, God willing, we don't need a food bank, give us flexibility to use the money so that it doesn't sit around, as I said rather cheekily about an hour ago. You know, you don't want us to sit on the money and not do anything with it because we can't figure out what you wanted us to do. So try to give us clear directions and flexibility. That would be very, very helpful. I'll talk about that. It doesn't have anything to do with the will. Well, yeah, the drafting of it doesn't. So that's the will. So we're talking about who gets, and we talked, you heard about fiduciary duty earlier. Joel talked about fiduciary duty. And you said it was a fancy word. I never thought of it as fancy, but it has to do with trust. Trustees are fiduciaries, and executors of estates are trustees. They're fiduciaries. And when we receive money from an executor who's already a trustee, we receive it as a trustee as well. So we are very, very cognizant of the fact that we are looking after somebody else's money and trying to honor their wishes. We take that seriously, and even though we do have a little bit of fun sometimes laughing about some of the restrictions that we just can't make fit, we do our best to honor what we think the original intention was. So that's wills. Let me stop there and ask if anybody's got a question about wills. What? Yeah. Yes. I think the question is if you own securities, and in your will you say you want the securities to go to your spouse. No.
When you have securities, you have to name the beneficiary. When you do the farms, when you buy securities and you invest in a security company or whatever.
Yeah.
There's a place where you have to write in the name of the beneficiary. So when you pass away, does that go automatically to the beneficiary, or does it go to the estate and then the beneficiary?
I'm pretty sure the answer to that is if you have to say the estate is the beneficiary for it to go into the will. If it's to the beneficiary, if it's to a named beneficiary, it would go automatically. Am I right? Yes. I know that works for life insurance and for tax-protected things like RSPs and TFSAs. So if there's a named beneficiary in a securities ownership, in a life insurance policy, in a tax haven, tax-protected investment, it goes directly to the beneficiary. It does not fall into the estate. Remember, it's everything that you legally own when you die. So if there's been a beneficiary named, it goes directly to that beneficiary. Right? Right. There's another piece. I'm going to hand the microphone over.
So if your question includes a non-registered account.
Closer to the mic, please.
Yep. If your question involves a non-registered account, so not a TFSA, not an RSP, not a RIF, just a portfolio, you can have the joint tenants named on that portfolio, that account. And so if it's with right of survivorship, if the one passes away, the assets in that go directly to the other spouse. And I believe Isabel can correct me on the legality of that, but on a taxation side, it's a spousal rollover as well between the two. And so it doesn't go through the will, it goes direct to the other spouse if the account is set up that way. The ones you're talking about where there's a beneficiary, it would be an RSP or a TFSA. You always want to have a named beneficiary to keep those going directly to who you want it to go, and then you don't have to utilize the will as a tool for that part.
That's right. So there's two things. There's naming a beneficiary, and there's also holding an asset in joint tenancy. They would, yeah, same result. Yeah. Okay. At the back, please.
I think just a follow-on to
No, not for the.
Can you hear? Yeah. Oh, wow. Okay. So just as a follow-on to that, I think there's maybe a question in there as well about if you've got a beneficiary named for the security or whatever it is as part of the, having the document, and there's something put in the will that says, oh, I'd like this to go to whoever, and that was done by accident or I don't know, for whatever reason, does one supersede the other? Like would the beneficiary of the security, that document, would it supersede what was put in the will?
I believe it would.
Okay.
The provision in the will would just what we lawyers call lapse, because there's nothing there. If the value went directly from person A to person B by beneficiary designation, then there's nothing in the will to leave to anybody. It would just lapse.
Okay.
One quick question. Is it recommended to have one executor as opposed to a number of them?
I like, okay, so this is an interesting question. And I'll give you the standard lawyer's answer. Do you know what it is? It all depends.
Thanks.
No, what I will tell you is that my recommendation has always been find one person, because you can't disagree with yourself. Well, you can, but then, that's a whole other landscape, right? No, you want we work together a lot. One person is good. There can be time, I'll come to you in a second. Yeah. There can be a good situation with more than one, but don't make it an even number, because then there can be a tie. Make it an uneven number if you're going to do that. I like to have a primary and a backup, and I'll come to that in the power of attorney and the representation agreement in a minute. But yeah, I advise one, and if you can't figure out one, then maybe you need to go to an institutional executor.
Sorry, just to reinforce what you're saying. Sorry. I would agree with what you're saying, because I was part of, for my mother's estate, a team, and so there was my sister and I, and we were both in total agreement about everything that my mom had put down in the will, but it required that both of us have to do the sign, because there were two executors. It was like she lived close, I was super far away. And every time a document needed to be signed, I had to travel 3 hours to get to the lawyer to sign it. And then it was logistically a nightmare to get the whole thing completed. Whereas if it had just been her with me as a backup, if she couldn't have done it, again, it would have been the same outcome, but with a lot less hassle.
That's the smaller of the problems that you can have with more than one executor. The bigger problem is, what if you didn't agree? And what if you didn't agree on something really important? That's when you get into real problems. Okay, we have somebody here.
So what happens if you discover you've been named executor on somebody's will and you don't want to do the job?
If you don't want to do it, you can turn it down. You just have to do it before you do anything. If you touch anything to do with the estate, you're toast. You've got to complete. But thank you for that question, because thank you for that question, because it brings up an important point that I haven't made, which is I believe that the will that you write should be a confidential document that you don't share with anybody. You should ask your executor that you want to appoint whether they would be willing to act for you. That's all the conversation you need to have with them. If they say, well, I need to know more about what you're going to do and how this is all going to work, you can decide how much of that conversation you want to have. But please don't tell your beneficiaries you're going to give them whatever you think you want to give them, because you could change your mind. And in the meantime, have you heard the word entitlement? Okay, so people start to feel entitled to what they think they're going to get. That causes all kinds of problems. So my advice has always been, keep it confidential until you're gone. Just make sure that your executor knows that they've been named and is willing to act. I've had situations where people have declined that, and it's a one-page document you sign, and you just don't touch anything, and then you're good. And if there isn't an alternative in the will, then you have somebody has to go to court and get somebody appointed. And now we're into money. So it's a good idea to money spent. We've got to.
Speaking of money, isn't there there's the executor does usually receive a percentage of something?
The executor gets to be reimbursed for all of their out-of-pocket expenses. They also get to take a fee for their services, anywhere from 0 to 5% of the value of the estate. And it depends on the complexity, the size and complexity, how much that would be. You can't get that without getting everybody to agree to it, who's entitled to to part of the estate, or going to court and getting a court order for that. There are institutional trustees who charge more than the maximum allowed under the legislation, and it requires a contract that the person who's signing the will signs agreeing to pay more. Yeah. By the way, I apologize for sitting through this. I have a bad back, and it's just more comfortable for me to be down here. I didn't say that at the beginning, but I hope you don't find it rude.
Not at all. My wife and I do have wills and powers of attorney and advance directives. In the will, our son is named as executor, and our daughter is named as the...
alternate?
Yeah, no. Named as the... What? He's power of attorney.
Oh, okay.
And she's the health directive.
Okay.
We haven't appointed an alternate. If we were to appoint each one as an alternate for the other, and one passed away, would that remaining child be responsible for both? That would, I think, be, we haven't talked about this, but that would seem to make sense. They would become the executor because the executor passed away, or the power of attorney passed away. So they would be both.
As I understand your question, you've named one or the other of your children as executor, power of attorney, and representative under a representation agreement with no alternates.
With no alternates.
So you could update all of those documents by adding an alternate, but they would each need to be done for each document.
Yes, okay.
Yeah, you can do that. You can update that without completely redoing it.
So if one were to say pass away,
yeah.
Suddenly the other would, and then we went, the other would be left with responsibility for it all.
Yeah, you can get those added without completely redoing all the documents.
Okay, all right, thank you.
Okay, so power of attorney is a very powerful document that appoints somebody who can do just about anything legally and financially that you can do yourself, including sell your stuff, your house, your investments, everything. The one I draft is very open and unrestricted, because you have to trust the person, and if you trust them with everything, is the way I look at it. It's usually the same person who's the executor in your will, because it's the same qualifications. They need to understand you and represent you according to what they feel you would want and according to what the document says. Obviously very trustworthy. And I also like to have one person as the power of attorney and an alternate. The other way to do it is to appoint two people and say that they can act separately, but that you'd like them to act together when possible. That's a complication that, you know, again, it all depends on your circumstances and who's in your life. So it can be one person, it can be a committee, but don't make it too big a committee. And so the power of attorney can have limitations that can be customized, but like I say, I do a very open-ended one, no restrictions.
Will?
No, that's the only thing they can't do is change your will.
Okay.
Yeah, everything else during your lifetime. Good question. There's somebody over here. Well, this is a good audience. You're a good group. You people are good.
If you're alive and still competent and you've named somebody as your power of attorney, can they start doing things without your knowledge?
They sure can, unless you say they can't. You can have it held until a certain event. It can be kept in your lawyer or your accountant's office until a triggering event. And by the way, you're mentioning something I didn't mention, the enduring power of attorney. The thing that makes it enduring is a clause in the document that says that if you start to have mental decline, that the power of attorney still will be valid beyond that incapacity. And it doesn't have to be called an enduring power of attorney in the title of the document, as long as that language is in it. Am I talking about?
Are you talking about the person starting to lose their capabilities and he is the power or she is the power of attorney?
No, the person who gave the power of attorney.
So I give you the power of attorney and you start to deteriorate or get Alzheimer's.
You better update it. You revoke that and get a new one done.
Okay.
It's when you're starting to decline that I can still act.
Okay.
Beyond when you've, so, yeah. Does that make sense?
So as a power of attorney, can I start to sell some of your assets?
Absolutely. Who's who here? Did you give me a power of attorney?
So if you gave me the power of attorney,
Yeah.
can I start selling off some of your assets?
You sure can. That's why you need to trust the person. And if you register that with land titles, you can sell the property. Yeah. Yeah. Happens all the time.
Okay. Thank you.
How do you prevent that from happening?
How do you what?
How do you prevent that from happening? I mean, other than trust.
Well, you have to trust the person you give the power of attorney to. If you start to see problems, you revoke it. And then you find somebody else, or you just don't give another one. But you have to stay in touch. There's people behind you.
What is the downside of not having designated a power of attorney?
The downside is that when you start to decline, you can't look after your banking, and you start accepting credit cards from people you shouldn't, and start making donations that you shouldn't be making, and nobody's taking care of you.
Thank you.
It's also good just even before there's any kind of mental decline. It's just good for convenience. That people who travel a lot and who are in places where there's no internet and no connectivity. It's just I've been nominated as power of attorney several times for clients who have been away during transactions that needed to be completed, and so they're just temporary. There's a time limit on them, and there's actually a limit on what I'm supposed to do. So it gives me authority to sign off on papers. It's a convenience thing, but again, I'm trustworthy.
Sorry, yeah, you mentioned that you could have the power of attorney suspended until a triggering event. Could you elaborate on that?
Yeah.
So, like, is that in the case of, like, I could put into the power of attorney that, the power of attorney isn't transferred to this person until my death, or until...
Not until death, because then the will kick in.
Oh, okay.
Power of attorney is only during your lifetime.
Oh,
But
okay.
it wouldn't go in, the language you're talking about would not go into the power of attorney document. It would go with a letter that goes attached to it, and it goes into somebody's file cabinet that's locked.
Okay,
Until
so
the
then,
time comes.
if it's living only, then would it be like in the case that I fail some sort of mental ability
That could be a
benchmark
trigger, yes.
that says, okay, I'm no longer able to do whatever, that's when this will kick in? You can put that
you
kind
could
of
make
language
that-
into it?
Yeah, you could make that the condition. I would want it to be a lot more clear than that.
Yeah, obviously,
But,
I'm not a
yeah.
lawyer.
No, that's okay.
But yeah.
Not all of us want to be.
No.
Ingrid's coming over.
How would you make it clearer?
How would I make it clearer?
Yeah.
I would write the correct language.
Yes. Can you just mention what it is?
Yeah, it depends on the circumstances. I think if you were talking about mental decline, I would want it to be an opinion, and it's a legal standard that's based on medical findings. So you would want somebody to give a written legal opinion that this person has become incapacitated due to mental decline, and have that opinion. That would be the trigger. I think that would be clear. You don't want a court judgment, because that's going to cost money. So you just want a lawyer's opinion, I think.
If you give your power of attorney to person A, and person A has given their power of attorney to person B, could person B start acting for A and dealing with me?
It all depends. I don't think, it depends on the documents. I don't think so. I don't think that would work. I want to move on because Joel has just reminded me, I'm getting to advanced directives. Did you want something else on power of attorney? Wait for Ingrid.
Can you have two people as the power of attorney?
Yes.
So one would balance the other.
Well, the way I've drafted them is either one of them can act alone, but you want them to work together if possible.
Okay.
So it's a joint appointment, but either one of them can act alone. That has worked in the past. Okay, I want to move to the medical side of things. We've touched on this a little bit. Who was asking about advanced directives? What do we want to know about?
I wanted you to talk about advanced directives. I just want to make sure that I'm in camera. Because as a priest, I have sat at the bedsides of people who have actively, personally fought being intubated or put on machines, and the spouses had no written information about this. And I want none of you to go through that with a spouse. But during the week, I was asked by somebody who said, we're very worried about the wording of an advanced directive. I think they were anxious that somehow it would give the doctors the opportunity to just unplug them and get rid of them. So it was that.
That's very helpful. Thank you. Okay, so the third document, I started out talking about a will, a power of attorney, and a representation agreement. Here in British Columbia, we have to be different. Most places call power of attorney for medical, but we have to call it a representation agreement. What it does is the person appoints somebody to represent them in healthcare, medical, and personal care decisions. It's not power of attorney because it's not financial legal stuff. It's things, and there is some overlap, of course, between the two. What the representative under a rep agreement has the ability to do is assist with decision making and actually has decision-making authority, depending on, again, how it's drafted, but mine are very broad, and they have access. So I'll use Ingrid, and I give Ingrid, make her my representative under a representation agreement. She has to assign it, by the way, because it's an agreement. This isn't something that's a secret. So Ingrid gets to make decisions on my behalf. Ingrid has access to my medical records. Once we have that in place, she has access, and she can go and talk to my doctor, any of my medical people, about my condition. And if it's worded the way mine are, she can actually override my decisions if I'm making a silly decision, like going into long-term care. I don't want to go into long-term care. I'm very independent. Don't make me go in there. But it's obvious that I need to be looked after. Ingrid can override me because of that representation agreement. It's a very powerful document. But again, it's customized. It's whatever you have given instructions for. Part of the representation agreement that I draft has an end-of-life paragraph. It's the advance directive that most people think of. It's the permission, actually instruction is not even permission, it's an instruction that if it's hopeless, and this is a paraphrase obviously, if there's no chance that I'm coming back, I authorize and direct Ingrid to tell the doctors to stop. And that is very powerful because it's not Ingrid's decision anymore. She doesn't have to live with, oh, I pulled the plug. I'm responsible for the end of this person's life. She is actually following my instructions and my wishes. So it's very powerful. When you put that in a representation agreement, remember what you're actually doing here is shifting the burden away from the person you're naming. It's really, I think it's a very profound document, something I spend a little bit of time talking about with people one-on-one, because it's really important to understand the breadth of and depth of this responsibility. But it's a legally binding document. It's signed by both parties. And it's important to get it to, if you're lucky enough in BC to have a family doctor, get a copy of it onto your family doctor's records, because that's your permanent medical file. And anybody in British Columbia who's working in an ER out in Penticton or somewhere, and you go in there unconscious or with your leg broken, they can see that you've got a representative, and they can actually contact that person. Now, I know as recently as just a few months ago, at the, I think it's probably true of all of Island Health, certainly at the Jubilee Hospital, they won't talk to anybody who hasn't got a representation agreement. So it's really important that you consider getting one of those in place. And you can have whatever you want in them. They can be very flexible, but I like, again, to have a very open-ended one and make sure that end-of-life decision is in there. So that's representation agreements, and living wills is what we used to call this one clause. And it used to be a separate document. It's incorporated into the representation agreement now, so it's all part of one thing. It can be separate, but it's better to incorporate it. So there are a couple of other things. There's a couple of acronyms. One is MAID, Medical Assistance in Dying. That's actually a form of advance directive, obviously. There's a whole complicated process, and it's supposed to be complicated for a reason. It has been controversial. There are moral issues, etc. But people have chosen that and you have to be at a certain point, and there's some controversy about when you should be allowed to make that choice. I know in some places you can just go and maybe not the pharmacy, but maybe a local doctor will give you what I nicknamed the black pill. But here it's quite complicated. And it can be, I don't know if you've participated in any of those. I haven't been to one, but they're very profound, I'm sure.
I want you to know that if you get to the point where you need to use MAID, I will support you and I will be there for you as much as you need me to be. I've been there when a parishioner chose MAID, and it was beautiful and dignified, and at the end, I said to the doctor, this truly was a ministry. It was a deeply spiritual thing. It is not cold or clinical at all.
Thank you, that's lovely.
We need 2 mugs.
So with the MAID program, if you've got that set up, can your, in the end of life paragraph, like if you're, have it set up, but at the last minute when you actually need it, you're not able to say yes because of whatever reason, can the person that is signed as your representation agreement person, and you've got that end of life paragraph, can they make that decision for you? Because I've just yesterday heard of an incident where it was all set up to go, and in the end the patient did not receive the MAID and had to suffer like for a week because he wasn't able to say, yes, I'm ready to go.
You know, I don't know the answer in that specific instance, but if I were the representative and the person who had signed up for MAID said, I can't go through with this, I would not be the one to override that. Just, you know, my own personal reaction to
Well,
that.
it's just
but
that they
I think it all depends on the circumstances.
Yeah,
Again,
the person was unable to answer the question in the right frame of mind, even though he had anticipated the need for MAID, but in the end didn't get it because he wasn't able to say, yeah, it's...
You know what they say, bad cases make bad law.
Yeah.
I don't know what I would do. I don't know about that particular situation.
But
I wouldn't hate to comment on it. I mean, theoretically they could, but
in the end of life paragraph you spoke of,
yeah,
could that not be specifically addressed in the wording?
Well, yeah, if you want to go into a whole paragraph about if I get to MAID and then I can't make up my mind, yeah, sure.
Yeah.
I will talk to people about that.
Okay.
Yeah, one more question here.
I would think that's quite common when it comes to Alzheimer's and other diseases like that.
I have no idea. I haven't run into it personally, so I can't comment. I do want to talk about DNRs for a moment. We've talked about MAID, that's one acronym. DNR is do not resuscitate. Now, we're talking about grim stuff here, death and taxes, remember? When you have a very serious illness and there is some conversation about end-of-life possibilities, your doctor can arrange and get the paperwork for you to have what's called a do not resuscitate order. What happens here is if you collapse at home, let's say you have a massive heart attack and you drop to the floor, somebody in the household calls 911. The paramedics who arrive must bring you back. They are required legally, morally, professionally. They have to bring you back. And they will not do that if you've got a DNR. But the DNR has to be in place and somewhere where somebody can show it to them so that they don't do that. And it's a great indignity sometimes, and why the do not resuscitate orders have come about is because it can be such a horrendous indignity, because if they do bring you back, you're probably not going to last a long time or have any function. So it's just another thing to think about if you're in a situation where you may have somebody coming to your door based on a 911 call. DNR, and they used to be blue. I don't know what they look like now. They used to be like somewhere on the fridge or the back of the front door or something. They're still blue? Oh, yeah. Yeah, you put them on the fridge because they'll look on the fridge. So that's just another little snippet of information to have about all this. So we're coming up to high noon. Any more questions? Sure.
So obviously, I run into DNRs quite a bit. Very often what happens is not everybody in the household is aware that the DNR order is in place. Well, we go through it, and they come up in all different colors. We also see them as advanced directives. Obviously, someone called 911, that means lights and sirens came to your door. In the event that you have a DNR order, please make sure that whoever it is that finds you knows that they're going to make a call and say to the operator at 911, this person, I found them on the floor, they appear to be dead, they have a DNR order. Now, we may still come lights and sirens, but then we're going to check and see if you're actually viable. Now, the DNR orders are for medical events at the end of your life. So normally it's written up, Kathy, whoever realizes that she's a certain age or a certain terminal condition, and she does not want extraordinary or heroic measures, thank you, to be performed to try and bring her back. So, so I'm at my life at the end. If you find me in this condition, then that's where I want to be. The caveat is, it's a medical. If you fall down the stairs and bang your head, that's a trauma. So now we're doing CPR, DNR. I have run into a situation where someone wrote a DNR order at end of life, and I love MAID for many things and I'm scared of it for other things, and that's my own personal problems. They wrote a DNR order and then they decided to hang themselves. That's a trauma, because and it's also now a crime scene, because we don't know if you were the one that hung yourself up or somebody else helped you, right? So there's a lot of things to this, and I'm sorry to kind of scare you, but please make sure everybody that you think is likely to find you on the floor, that includes the house cleaner, knows, sorry, but it does happen, knows that that is what your wishes are. So they find you in a condition where obviously it hasn't been a trauma, you've just, you're dead in bed or whatever, that gets transferred through. We did have a situation, that was one of the local departments here, end of life, the whole family came over to kind of, mum's dying and whatever. The grandson, the little boy downstairs, doesn't know. All he knows is everyone's upstairs upset and grandma's not well. He calls 911, right? So, I know that there's all these kind of little wrinkles in it, and as a fire officer coming in, one of the first things I'm going to do is, if someone's already doing CPR, I'm going to continue CPR. I've been in a situation, someone's doing CPR, I'm doing CPR, and then they remember, oh, there's a DNR order on the fridge. So now I've got to wait until I can get the ambulance crew in, they make the call, and then phone and say, hey, yeah, this is, stop doing that. So I know it sounds kind of like painful, and I'm kind of bringing all kind of my backwash to this, but just kind of be aware that there are some of these different wrinkles. One of them is trauma. So if you've had a traumatic injury, then the DNR order doesn't necessarily count, right? It's for a medical DNR.
Thank you.
Thank you.
Unless anybody else has any questions, what I will do is say that I am not taking any new clients, but if anybody wants to have some legal advice, updating their will, their power of attorney, their representation agreement, anything we've talked about today, we have a law firm that we have a great relationship with. It's down the street from the Synod office, and a bright young woman lawyer who does this work. If you want to, I would refer you to her, and I'll give her information to Ingrid. So if you don't mind being the
absolutely.
So you can contact me, but you won't get any legal advice from me or documents, because I'm not doing those anymore. These guys keep me busy.
Yeah, they do.
So so I just wanted to say that, and thanks for all your questions today. and for listening to us talk about these terrible subjects. Death and taxes, the only two things in life you can't avoid.
Indeed. But having said that, I can see a palpable amount of relief around the room that people are coming to grips with subjects that often are avoided. And I want to thank all of you for being sensible and courageous enough to come and face the topics that we often don't talk about. Particularly grateful for the EMS at the back who is giving us all the helpful advice. Thank you. I'm glad that you're here. All right, so this is a heartfelt plea from your priest. Please do not tell your family, I don't want a funeral, I don't want to put you to all that fuss.
And I'm going to interrupt you and say, don't put it in your will.
Please don't.
I have asked for instructions on your last wishes, and a lot of people say, well, I just don't want anything, no fuss. And I tell people, it's not for you.
Yeah, exactly. It is not about you. I had this in the last week. A parishioner who hasn't been here for a long time because he's been very ill, and his poor wife can do nothing because she feels that she needs to honor his wishes, and so therefore there can be no funeral. I have in the past honored the letter of the law and then somehow just creatively turned the Sunday morning service into a remembrance of somebody's life. So beware, if you do that, I may just work around that. Seriously, this is not for you. It's for the people who love you and deserve the right for closure and deserve the right to celebrate your life because you're all amazing human beings. So, you have been told. Second of all, and you've heard this from me at least 4 or 5 times, and you're going to hear it from me again. It breaks my heart when people's unchurched children say, oh, they don't want a funeral, when I've known exactly what that person wanted and I had nothing to prove it with. That is why I want you to fill this document in. And it will go into our office here. I know that this was done some time ago. I know that at least Carolyn has done this before, and she's... Yeah. So this is not for public consumption. It's for me. And I want you to think thoughtfully about what you and your family would want to celebrate your life. You have favorite hymns. I know it's the Old Rugged Cross or In the Garden. It's fine. Have a look at the recommended readings. And if you don't feel like looking all of these up because you're Anglican, I will put the document up. I will make a page online and put the document you can download and have a look. Can I tell you how much easier it makes for your family? Because I've sat with people and they've gone, I don't know what scripture. Also, there's a reason why these ones are recommended, because a funeral is a celebration of resurrection. It is a time that begins with, and the way I shape funerals always begins with remembering the person and then goes towards resurrection. It is a time that points towards hope. We can't be having ghastly, miserable, downer readings in a funeral, which is why these are recommended. Likewise, please don't choose downer, awful hymns either. And if you choose Abide With Me, we're going to be doing it double speed. So this really helps me. The contact details of your next of kin. It helps to have the name we know you by. For example, Lisa Broderson is known legally as Hillary, but so your real name, Lisa, I'm looking at you online. The date of completion, and things like, will the remains be present at the funeral? If the remains aren't present, then it's a memorial service. That's the difference between a funeral and a memorial service. In the Anglican Church, I know people love calling it a celebration of life. It's actually a funeral. Look in the prayer book. So whether your remains will be there or not, do you have a place where your remains will be interred? Because there's a liturgy that goes with that, and we go after the funeral, and we bury you, and there's a short 15-minute liturgy that goes with that. We no longer have a registered memorial garden. We can't bury all of your ashes, but there's nothing to say you can't scatter a handful of ashes in the garden if part of you wants still to be here. I've told my son I do. I want part of me still to be here. All the way through COVID, I'm going down to service details, all the way through COVID, we had only graveside services, which was really awful because you wanted more than you wanted a choir and everything. Sometimes people choose to have a funeral at a funeral home, but please don't. Here is much better. Do you want to have it with the Eucharist or not? If it's going to include everybody in the congregation, then yes, please do. If you and 3 people are the only people who are Anglican and everybody else is going to feel awkward about Eucharist, then maybe not. But remember, everybody is welcome to come up for Eucharist, right? I have sat in funeral planning meetings over the last 21 years where there are fights about who's giving tributes. Sort it out now, please. And no more than 5 minutes, otherwise the funeral becomes a hostage situation. I'm not kidding. I can tell you horror stories. The tradition in the Anglican Church is that the family is offered the opportunity to give people who are special the chance to read the readings. You might want to consider that once you've chosen what your readings are. The priest or the deacon always reads the gospel. If you're having a Eucharist service, then you're going to have all 3 readings and the psalm. If it's a funeral without the Eucharist, you can cut back on that if you want a little bit. You need at least a psalm and a gospel. So there is hilarity in the back row. I need to separate those two. Let us know if there's some kind of additional liturgy or litany or something that goes with it. For example, are you a member of the Freemasons? Are you a member of a particular sorority? Something like that. I need to know. And then we'll need to know, are we live streaming as we are today? Do you want us to record it and put it on our memory stick? Would you want to have a video tribute? Usually better before the service than in the middle of the service, otherwise it gets lengthy. And in the reception, if you're going into the hall, do you want to have pictures? Sometimes people put up a series of pictures in a loop that play and particular music in the hall. All of those things for you to think about now to take the burden away from your family for when your turn comes. Are you going to have the reception at the church? Some people don't. Please decide now where you want your donation to go. Donation in lieu of flowers, because often the family has no idea. And they go, and if there's anything else you want. I mean, if you want a clown in the service, you need to write that down. I wouldn't know. So please, before you file this underneath all the junk mail that comes into your house and it collects dust and you forget it, please think about this and fill it in and get it to me or to Caroline, and we will file it safely for you. And in another 5 years' time, we're going to do this again, and you can update it. But this is a kindness to your family, so that they don't have to make difficult decisions in a very tough time, when they're still stunned and walking around shocked and shell-shocked and they don't know what to say. Do this, and do it for me, please. I want to be able to say, I know you think they don't want a funeral, but look here. And sign it at the bottom. Yep.
What's the timing between date of death and funeral?
What is the timing between date of death and funeral? It all depends.
No, that's my line.
I just stole it. You didn't have a copyright sign on it. You know, it really does depend. Some people want it, and please don't do this. We want it at the end of this week. Caroline and I die when you do that, because we have to organize everything. The Altar Guild has to organize things. There are flowers to get. We've got bulletins to put together. So please try and give us at least a bit more than a week. But sometimes people say, I've got relatives in Saskatchewan and they need to get here, and we'd rather do it in 3 weeks' time or 6 weeks' time, and that's okay. So it's whatever works for you. But please do have a funeral. You know, it can be, you've all attended really beautiful funerals, and you know how healing that can be. Other questions? I know there was something else I was going to tell you, and now I can't remember what it was. It's been a very long week. I've been on clergy conference all week. So, any questions, please ask me. I will put this up on the website for you to have a look at. Just so that you know, if you are a member of this congregation, we do not charge you for the funeral. It's up to the discretion of the musical director or whoever's playing the music for the funeral, whether they charge or not, but we will not charge you for my service, for the use of the premises, for the live stream. You're active members of the congregation. There is no charge. So you need to know that. Yeah? Can you share a digital version of this form? I can share a digital version of this one. In fact, what I think I'll do is I will look at the sign-up sheet, everybody signed up, and I will email both of these documents to you, plus the document that has all the readings in it. So, yeah. Any other questions? I think Caroline has it. I'll get it from her. Okay. We have some handouts that I will put at the back from Joel. Thank you, Joel. We didn't put them at the back earlier because we wanted you to listen to Isabel. So
that was my rule.
Those are my keys, yes. It says Ingrid on them because I do this. Jeff and Gay showed me a book called Putting Your Affairs in Order. I would not recommend that you use the will that they have in there. Go to a proper lawyer. But they have some very useful checklists.
Don't use the will.
No, I just said that.
Thank you.
Don't use the will. But there are some very useful checklists in here because it's very easy when you are stunned and grieving for things to fall between the cracks, and next thing, 8 months later, you realize you've still been paying for your late partner's cell phone account. So I'm going to buy a copy of this for the library, and there are downloadable check sheets that you can fill in, telling your family, for example, I have savings in this bank and this bank. I have an insurance policy with here and here. Letting them know all the information that's in your head but won't be in your head to help them when you pass. Well, I hope it won't be in my head. Yeah?
A couple of years ago, my brother...
Okay, if you're going to do a little talk, I'm going to give you a microphone. Or Michael shout at me.
How's this work? A couple of years ago, my brother shared something with me that I've carried on. He had a book called Just in Case. And I've updated it a few times. Everything's in alphabetical order, where my bank accounts are, and I find it very instructive to go back to it every once in a while, and I need to update it.
Yeah, absolutely.
Thanks, Dad.
I'm also, can I just interrupt for a second and mention that there are things that are not necessarily obvious to you that you might think of. I've got Facebook friends who have been gone for years.
Yeah.
You need to think about who's going to take that down. That all those digital things that we never used to worry about, us old people. But yeah.
Yeah, thank you for talking about that.
Yeah, it's important.
Yeah, it is important. You can, the moment somebody's died, you can request from Facebook that they memorialize that person's page, which means people can post, like we miss you on your birthday or that kind of thing, but it's no longer an active page. And it took me a while to figure out how to do that, but I did that for my dad. And it's really rather lovely. You can actually put a little tribute to them and everything. So those are the things you need to think about now, otherwise your kids will have no idea. I mean, if you have $500 notes under your mattress in a spare bedroom, you need to tell them, right? Okay, that joke didn't land well, did it? Any other question? I would like to end by thanking all three of you for spending more than your Saturday morning with us and sharing your expertise and giving people, I think, a sense of comfort and a confidence that you know more about these things now. So thank you so much, and we really, really appreciate it. Thank you, Isabel, Todd, and Joel. Okay, I'm going to put these at the back.
Okay.
Ingrid, I'll send you a PDF.
Oh, that would be